Hey guys, welcome on in. Pretty fun day here in the market. Nice jolt to the upside, at least in my portfolio. We're cruising here. How's it going, Nick?
Good, good. I like the cruising pun with Royal Caribbean, new 52 week highs, Carnival Cruise Lines up 7%. That was pretty clever of you.
Oh well, didn't even mean it that way, but I'll totally take it. Yeah, shout out, dude. Royal Caribbean's been on an absolute rager ever since I went on my first cruise, which was a long time ago at this point. But hey, they never really slowed down. They just seem to come out of the depths at that point. When did I go on this cruise? Let's
How
see.
much did you spend on the cruise? The real question.
I spent $0 since it was a gift from my girlfriend's parents. Shout out to them. I went on a cruise on April 30th of last year. And since that time, if you go back to April 30th, they were trading at about $80. So they're up almost 100% since I went on that cruise. So pretty nice. There you go. Royal Caribbean coming along from, yeah, wow, maybe they're even down a little bit more. Maybe they're down to like $65. So they might be up over 100% since I went on the cruise. All right, if you own a cruise ship business, it's probably in your best interest to actually give me a free week on your cruise. It's actually proven now, one for one, 100% accuracy rate to make your stock go up. So the more you know. All right, we are going to go ahead and kick into things. Emp, I see you in the audience if you want to jump up on stage. I know that a couple people weren't able to make it tonight, so I encourage you guys, if you're on stage, feel free to elaborate on your points. And just good to have everybody here. But we're going to go ahead and get started. If everyone's able to share out the space, if you're in the audience and able to give it a share, much appreciated. Feel free to comment below if you have a stock pick that you would pick for this week. Feel free to throw that in there as well. All right, Andrew, you mind kicking us off here with some market sentiment?
Yeah, what's going on, everyone? Hope everyone is having a good Monday so far. In terms of market sentiment and what I'm seeing from the price action, it's been an awesome May. Yeah, I was looking at a heat map of the S&P 500, and the best May for the SPY ETF since the year 2000 was a 5.8% return. I think it was in like 2009. So far for May this year, we're already at, I believe it's like a plus 5.6% return. So the market is doing very, very well. We had some nice moves in the China stocks. That was like my big trade for May. And I actually closed out of all my exposure to the China stocks. I'm in a really weird spot within my process because I got a sell signal from one of my models yesterday. So I really just closed out all of my exposure. I added a short position in the S&P 500, but I kept it very small because even though I got that sell signal, I'm looking at the market. I'm like, Bitcoin is like breaking out. We have Nvidia earnings coming up on Wednesday, and Nvidia is pretty much like trading right up to those highs. So yeah, at this point in my process, like May's been a good month so far. I don't really want to give that back. So my exposure overall to the market is just very, very low. And I have a small short exposure. If the market takes another leg higher, perhaps I'll actually add to that short exposure and make it like a real position. But for right now, I'm looking around and I'm like, okay, for my process, like I don't have a whole lot of edge here, especially heading into this event. So I got to just be a little bit smaller. But yeah, I'm looking forward to that Nvidia earnings report. That thing has been, a rocket basically every time it reports earnings. But we're starting to see like Stan Druckenmiller mention that he took some chips off the table in Nvidia. So yeah, really curious to see what they report. And for me, yeah, I'll just be looking for the next opportunity. So yeah, some of the names that I'm looking at, I'm just trying to make sure my focus list, is really up to date. There's a couple of companies I've been watching. Jumia, which is ticker symbol JMIA. I'll use that as one of my picks for this week, even though I'm not long. I barely have any positions. So yeah, JMIA. That one had a good reaction to earnings. And then I'll stick with Alibaba, ticker symbol BABA. The China stocks, they've been having a really good run off the lows. At this point, a lot of them are pretty overextended. So I trimmed out my positions, but just to have a pick for this week, I'm going to go with Alibaba. So yeah, for me, I'm just kind of chilling on the sidelines, waiting for the next move. And yeah, really curious to hear what everyone else on the panel has to say for tonight. Thank you.
All right, you got JMIA, Jumia, and Baba. And those are both going to be longs, right?
Yep.
So it sounds like probably a lot of the funds concur with what you were saying in the beginning there, because everything that you were saying sounded like low volume. That was my takeaway from it, right?
Yeah, for me, honestly, man, it's been such a good May. Like, I really can't complain. So, yeah, for me, I'm just chilling. I'm sitting out a few hands right now.
Got it. All right, perfect. There you go. Hey, by the way, I need to announce this because I don't think it's ever happened before. And we've been running this show for, I want to say like 3 years almost. I mean, this is the longest running show on X. I started this show late 2021. This week might have been our first week ever. Every single pick that was given on this show last week, first of all, you can go long or short on this show, but we all went long last week. Every single pick was green in the correct direction. Massive week. We had 5 different picks that returned more than 10%. Actually, six different picks that returned more than 10%, two that returned more than 25% on the show. Just huge outperformance across the board here from everyone. So I just want to give a big shout out to everyone for doing a really great job here with the stock picking this past week. Again, our best week. If you took all the picks that we had given and you just averaged out the return, it was over 10%. So double digit return in a week where SPY returned 1.67, Qs returned 2.67. We did over 10%. So huge week, one of our best weeks ever, 100% accuracy rate on our picks. So perk those ears up if you're in here. Get ready for the fun. Let's go over to Nick Drendel next for some more market sentiment.
All right. So I'm gonna pin a tweet in the nest. It's kind of been my like thoughts about over the last couple weeks, and I just think it's really important to walk through this process and kind of see how this like 2-ish month flag shaped up. And now that we're kind of breaking over the downtrend line, everyone's talking about it. Everyone's getting excited. Bitcoin went over 60K. I think it's slightly back under now, but now that we are seeing momentum come back in, it's really important to go back and study the price action that prepped the move here. So we had a awesome move to start the year, um, or even kind of coming off the correction last year. It was like 26K. Is that right? Yeah, 26K into 74. So monster rally. And instead of kind of like peaking and then completely falling apart, we put in the high like right around March 14th and just basically traded sideways. Yes, there were some fluctuations. Yes, there were some like breakdowns on heavier volume, but every breakdown was immediately met with a bounce instead of breakdown, then follow through to the downside. And after we kind of got under the 50-day moving average and took out the previous lows on the 1st of May, we had an immediate shakeout of that area and then reclaim of the key moving averages. And that was really when I started to like become like laser focused on the crypto theme and Bitcoin more specifically. From there, we had a higher low. This is one of my favorite setups to trade is like the higher low after you test the 50-day from underneath price, and then you get a really nice pivot. And a lot of the times, if you scan for stocks, like swing traders tend to eliminate stocks that are below their 50-day moving average, just because typically when you're below your 50-day moving average, you're not in an uptrend yet. You still need to introduce momentum. And what I try to do is sneak into the stock or ETF, or in this case, Bitcoin, before the momentum really gets started with a stop like under what would be a potential higher low there. So you can get really tight risk on the entry. And then if we do break over the pivot, it starts to get talked about. If you break over the 50-day, momentum starts to get even crazier. And today is like the third domino to fall in that setup where we're now above the downtrend line and we uppercut $70 or 70K. So momentum and all the eyeballs are going to be on this asset class now. And hopefully that leads to a nice clean uptrend into new highs. I wouldn't be surprised if we had kind of like a shakeout after this uppercut, just like we saw on the other side where we undercut the lows and then ripped up. So today I was actually trimming a little bit into strength. I had a pretty overweight position on it. But overall, that's a great sign for the market. We see NVIDIA gapping up today into new highs. QQQ, SPY, all new highs. There's something to be said that the market's a little extended in the short term, and maybe we get some volatility with NVIDIA's earnings. And I think that would be completely fine as long as NVIDIA doesn't like completely fall apart, which I don't really see that happening, but there's always that possibility in the market. But at this point, I'm just looking for more of a pullback. Like Andrew said, May has been a great month. If you're putting on a ton of exposure right now, right before a binary event like an NVIDIA earnings, I think that's a little risky. But I think the market leaders have really shown themselves, and now we're just looking for either sideways action or a pullback to not only identify the next like group of leaders, but then as we pull in and get supported to get like fully up to 100% invested and then try to hang on to those leaders for the long run. But short term, everything looks great. We're all holding our breath for Wednesday after the close. But I'm not seeing a reason to be like overall trend wise bearish at this point.
Good points. Thank you, Nick. All right. Michael Naus, got some thoughts here on market sentiment?
Yeah, I think a lot are going to be echoed by what the other speakers were saying. You know, I've been the guy who's probably obnoxiously every week saying if you can't survive the bull market, you won't survive the bear. Kind of dismissing or hand waving anything that news related that kind of shook the market. I'm still right. We are still in a primary uptrend, and things are still looking great. And you know, we broke out to new highs just recently. But there's one thing that I did see that was concerning today, and that was actually the Dow dramatically underperforming the S&P 500 and the Qs. The Qs had an amazing day. The SPY did okay, and then the Dow was actually down with a pretty negative candle. So you know, you can look at the weightings of those for some explanation, right? One of which is going to be financials had a really bad day today, with tech doing well, and we've seen that this relationship can exist for a very long period of time. You can have tech absolutely soaring and financials, just lagging behind, but it's very hard, in my opinion, to have a good long sustained rally without financials, breaking to new highs and at least catching up. So that's kind of one notch in the belt against the market. Now it's only one. That and what Nick was saying, we are a little bit overextended here, but that's just short-term overextension. Long term, we're still doing fine. But the overextensions combined with just how stark this Dow versus S&P 500 difference was got me a little bit nervous, and I actually put on, for the first time in a while, I put on some short hedges in the market against some long positions, right? I took some Coinbase and Robinhood earlier today. They closed well, and I think they're going to continue. I did a little video on my channel that got some people upset, being saying the real winner of the meme stock pump and dump is going to be Robinhood because they probably made so much money with people YOLOing back and forth into things. And now even with Dogecoin moving, I think they're still going to benefit with people YOLOing back and forth into things. But just very good setups there in Coinbase and Hood. But this Dow was enough for me to actually take a little bit of a short position on the Dow itself to hedge against this. So this is the first time, I think, since the last dip that we had that I've actually been anything but just aggressively long. So again, could be wrong. It just feels like there could be some short-term tensions here. When you start to see things break like that, Again, it doesn't mean that it's 2008 all over again, everyone run for the hills, but it could just mean that there's some profit taking in some sectors. And then the question will just remain, can the rest of the market hold up if profit taking starts happening in the Dow Jones sectors? And, being the old boomer guy here, I'm probably the only one that actually still looks at the Dow Jones, but it is incredibly important index, even though it's not, super fun and has a lot of tech in it. So I'm focused on that, and I'm focused on financials. If those things can turn and recover, then that's great. If they continue lower, then I'll probably start to sell some longs and maybe add some more hedges. So, not the end of the world. I don't think, an imminent insane crash is coming, but as some people mentioned, there are some binary events coming as well. Nvidia earnings, I look at that and I say, well, if the Dow guys, the boring boomer stocks are pulling back a little bit, but the tech stocks are holding up the overall market. If Nvidia falters at all in this earnings report, then you would imagine that that's going to be the tech pulling back as well, and now you have this kind of broad market pullback. So um, that happening right after all-time highs is kind of poetic, right? You have the people who've been following this space, who've been talking about being long and staying long ever since that last little dip. And then you have the people who are YOLOing into new all-time highs when the animal spirits with, these meme stock pump and dumps really kind of kicked on. So it would be poetic if we do get a little bit of a pullback here just to shake out some weak hands before moving higher. And I'm kind of prepping for that again by just taking profits and adding little bits of hedges here and there on weak names when I can see them.
Very nice. Thank you, Michael Naus. Okay, let's keep it moving up here. Jordan, what's on your mind when it comes to market sentiment?
I mean, things are flying as of now. Obviously, pretty much all eyes are on Nvidia earnings this week. I'm interested to see what's going to happen. We have a few other names reporting, but nothing really that has a big weight in the S&P 500. So we'll see what happens with that. I mean, I've been playing a lot of calls for the most part. Haven't really been short at all. For the like any shorts that I have put on really didn't work out. So yeah, just been staying long for the most part. Not really trying to change anything up until I see something that gives me a reason to. At the end of the day, I mean, we just made more higher highs. Google just made new all-time highs today as well. We have plenty of names, right, skyrocketing. I don't want to be the one that try and pick top or anything like that. I think it's smart, like Michael Naus was saying. He's going to be taking some of his profits and adding some hedges on, which I think is smart, right? I'm personally not worried about hedging really at this point, but I'm also I just trade my short term account and then I really look to buy my long term account, right, for the most part. So I'm not too worried about any downside that might come along. I am expecting Nvidia to beat their report. Obviously, that doesn't mean that the price action will just be up. We've seen plenty of companies beat and then price action goes sideways or if not even to the downside. So I'm interested to see what happens with that. I'm just gonna I'm not playing anything there. I don't know if anybody's seen the contracts, but the contracts are absolutely ridiculously juiced. I was looking at contracts that are usually, in the I don't know $400 to $600 range. They're sitting at like $4,000 right now, or not right this second, but earlier today. So I thought that was funny. Options are just absolutely juiced there. I wouldn't want to play anything overnight when earnings does come along, but we'll see what happens afterwards, and then probably make some decisions there whether this market's going to pull back a little bit, maybe retest some of the previous highs, or we just keep skyrocketing. Nvidia goes to 1,000. I don't know what the future holds quite yet, but we'll wait and see what happens. I like to play the reaction game more than try and play the prediction game. So we'll see what happens.
Sweet. Sounds good, Jordan. All right, keeping it cooking up here. Enjoying the market sentiment that we're getting. Emp, you want to go next?
Yeah, I'll jump in. I mean, pretty much all of my thoughts have already been shared by the great speakers up here. I mean, I think most of us are on a pretty similar page of, there's it's low volume and we're just melting upwards, right? So you have to be at this point almost cautiously optimistic in a way. Hedge yourself, obviously, get some profits off. for me, as far as like swing trades, I'm waiting post NVIDIA and trying to get the picture complete before I start looking really into some bigger swing type of setups. I do have to mention Netflix hasn't been mentioned yet today. The daily on Netflix looks absolutely amazing, and it broke out today out of a very good-looking bull flag, new 52-week highs with some room. So I'd love to see some continuation there. And I'm also watching Coinbase. We saw the news came out today with on the Ethereum side of things, which it's still more speculation, I think, than news. I'll let someone else that maybe knows more about it speak to it. But the basics of that, there's a lot more positivity around a possible Ethereum ETF, and we saw obviously some very nice moves in crypto and the Coinbase chart. It looks like we have a falling wedge on the daily that's been building since early March, that is finally starting to breach some of that upper resistance. So those couple names there that I have to look at. But I'm also interested, overall sentiment wise, I'm interested to see what the FOMC minutes are. I think a lot of people do have their eyes, obviously for good reason, on NVIDIA's report. And I think that's obviously the bigger catalyst that we'll have to deal with. But I'm interested to see just what kind of comments we might get, or what kind of if there's any dissenting or change in thoughts out of the FOMC minutes. I don't know if it'll be a big move or not, but I'll just be interested to see if we have any type of shift in some of the dialogue coming out of there as well. As mentioned on the last space, we saw some of the defensive sectors recently, strong: healthcare, energy. We've seen a lot of these Dow names, industrials very strong as well. So it'll be interesting to see if some of that money starts to get spread back around. So whether that goes back into some of these tech names, or if we maybe even see some small caps finally start to get going a little bit more, which they've had a nice recovery over on IWM. So that's kind of what I'm looking for. I think the picture that I want to paint personally for my style of trading is going to be completed after Wednesday evening and to the end of this week. So I'm very excited for next week, to be honest. That's just how my trading strategy lines up with this as we get through the final big piece, or the final Mag 7 earnings. That kind of will help me paint the full picture.
Perfect. Thank you, Emp. All right, Jag, what's going on? Some thoughts here on market sentiment.
Hi, guys. Good afternoon, everybody. Can you hear me okay? Once again, I'm in the car driving, so I want to make sure.
Yeah, you're good.
All right. Okay, I want to share this tweet from February 21st. This was the last time when NVIDIA reported earnings, so I just put it in the nest. When you get a chance, take a look at this, right? And what you will see is, take a look at the quarter over quarter change, the rate of change in sales growth, quarter over quarter, sequential, for the last 3 quarters. And you'll see it went from plus 141% to plus 41% to plus 27% to the guidance that was plus 10%. This is for the quarter. This 10% is for the quarter that will be reported this week. So there's a decelerating trend here, quarter over quarter sequentially, right? And there was a note out from Bank of America in its earnings preview note last week, and it basically had a bit of a caution sign on it. And Bank of America made the case that, look, it's become habitual to sort of just expect NVIDIA to blow estimates out of water and have a great set of numbers, and everybody get excited. But we have to be mindful of the rate of change that we have seen, precisely pointing out to what I have in this tweet from February 21st. Specifically, Bank of America said that the trouble we have going into this earnings report is that for the July quarter, when the company provides guidance, the street is expecting the quarter over quarter sales growth to be in the mid-teens percentage, but they guided only 10%. And if this decelerating trend continues, there is a good chance that Nvidia will guide only single digit percentage change quarter over quarter from what they will report this week to what they will guide for the July quarter. And the street is not ready to accept that. That's where the trouble comes in. The street is not ready to see Nvidia guide only single digit percentage change quarter over quarter in sales. That's where it could hit the multiple expansion or multiple contraction, right? That's where it could hit the stock and it could bring in some volatility. And then Bank of America also pointed out that the reason why the risk for such a an accident basically waiting to happen being a little bit higher this time is for the simple fact that they're going from H100 to Blackwell, and there's a product gap over here. And so you're going to see where, in fact, there are already anecdotal signs on some websites, such as Tom's Hardware and a couple other places, where the price of H100 has started to come in slightly lower than what we observed in the past couple of quarters. I'm driving, so I don't have the links in front of me to share those charts, but the H100 prices has started to come in slightly lower, while it takes time to ramp up production and sell the H200, which was launched just a couple months ago. So there's a little bit of a product gap over there too. The point I'm trying to make is that um, I don't know if this all means that there could be 1 or 2 quarter of accidents waiting to happen in NVIDIA that will set the low bar of expectations during the summer months before we have a ramp up again in the second half of 2024. But be open and mindful to anything. And that's how I will start off, by just sitting and laying out the background, because aside from NVIDIA, there's really just no major catalysts this week. It's pretty quiet. Volumes have just feels like it's completely dried up. Nobody's buying, nobody's selling anything. I mean, today at 3:30 p.m. Eastern time, I was looking at the market, and gosh, it was 22 million shares traded in SPY versus 10-day average of 64 million. I mean, once again, for comparison purposes, on Thanksgiving Friday, we did 29 million shares when the market closed early at 1 p.m. Today at 3:30 p.m., we had 22 million shares in a SPY. So, I mean, it's so dead out there. There's just not a lot of volume in anything. It's been like this for about 2 weeks now. NVIDIA is really the only catalyst this particular week. So that's my high level view. I do want to ask one question, Wolf. You know, we all get together in these weekly spaces to make these top picks for the week. And I wonder if you have any kind of spreadsheet or any kind of charts or graphical presentation that has been telling up these weekly performance from everybody combined, not one person, but all combined on a week to week basis. Like if you were to chart this out, or for example, if you go back to, like, let's say a year ago and say, you know what, if I took $100,000 and I strictly followed these picks every single weeks to the penny, like, on Tuesday morning opening print, that's a buy. And on a Monday at the closing bell, that's a sell. Strictly to the penny, starting with $100,000 a year ago. Where would the performance be? Where would the balance be on that account today based on all these picks? I wonder if there was any exercise like that ever done to kind of show, because I'm telling you, I see sometimes these performance like this week and I'm like just blown out. Like, oh my gosh, how do so many of us just pull double digit percentage gains on the week? How the heck? I mean, this would be the kind of fun performance that will kill anything that's out there. I wonder if you've ever done any exercise related to this.
We do track all the data. I think that one thing from this past week, which Nick, I saw that you noted afterwards, was that these were from Wednesday, so we were using Thursday's open as the denominator, so it was a little bit changed from what I thought it was, but we were still really good. We still way outperformed the indices. So yeah, Jaguar, we'd have to maybe talk with Ben or someone else that, understands Excel really well, but we've been tracking the data for a long time. We usually fill up maybe 14, 15 rows a week. Maybe a little bit more than that because we're, maybe sometimes we have more predictors, sometimes we're using a couple of rows for averages. But this Excel sheet has 1,387 lines of data in it right now. So we've got a year plus.
Yeah, we need some good analytics around it to kind of like put it in charts, performance, like on a 3 months, 6 months, 9 months, a year basis, and then see where it pops up. Where it pops out
Yeah.
the answers. And I think it's gonna be mind blowing when you see those numbers.
Yeah, it would be really interesting to me. I'm not the data analyst, so I personally won't be able to do it, but we do have this sheet. We do have people that do track and do things inside of it. So perhaps Ben would be able to cook up something like that. But we do have over a year's worth of data. I am pretty certain of that, I will say. Tracked. Yeah, and we publish it as well. Okay, really, really nicely done across the board there. I think we just have one more here for market sentiment, and that's going to be you, Ariel. Thanks for popping up.
Hey, thanks for having me, Wolf. Just making sure you guys can hear me
Yep.
here. So, I know one of the comments we were talking about is the low volume. And just from my swing trading perspective, the low volume has actually been, it's been helpful because it's not necessarily, I don't have any, heavy names that are directly correlated to the market. So something like STNG that broke out of its nice base, or, AA Alcoa, which I mentioned, I want to say it might have been last Monday. These names are just trending higher. I mean, they're in the right groups, which is good. But you're not necessarily dealing with a whippy market right now. It's just kind of melting, on low volume higher. Which, as a trend follower, it feels kind of like a dream because pretty much everywhere I look around in my portfolio, obviously silver, I have PAAS, and it's a bit of an outlier. The group is just unbelievable. I mean, 6.5% up day on Friday is pretty eye opening. But names like AA, WFRD, TDW, I mean, names are just continuously grinding and melting higher. I mean, it's making the job of a trend follower very, very easy because stick a moving average on it, and if you're above the 20-day, you're good, right? It's like you don't have to really do much with them. Just focus on the strongest groups. Nice, tight, clean consolidations, and then names breaking out of those consolidations. And I think over the last 3 weeks, really since May 2nd, when there was like a little bit of weakness in the dollar, weakness with interest rates, the market's just been very, very cooperative to the long side. And then it's nice to see that when there is a good piece of news, or it is a strong sector, like the HIMS had pretty good news today. It's received well, and news is received well, or even Robinhood, when good news is received well, there's definitely volume piling in, and it's good to see. And regarding HIMS, I don't have a long position, but if something like Lilly were to continue going higher, which it's still one of the nicest weekly charts in my opinion, it could very well just continue to drag HIMS up higher, on that GLP news. So we'll kind of see. As a trend follower myself, things are pretty great. I mean, some things are getting a bit stretched. I did, like some guys mentioned, peel away some profits on PAAS and AA, a little bit of STNG, because we are just getting a touch stretch from the 50-day. But I mean, there's really not much to complain about. I know we've got an event with NVIDIA on Wednesday, and I do own NVIDIA from May 2nd, but just over the past few days, my focus has been just shorting a little bit of AMD, just as a hedge to my long position, just not wanting to cut NVIDIA altogether, and just have an opportunity to hold it through those earnings. And so just being hedged with a lagging name like AMD. My thought is, if NVIDIA gets hit, AMD will get hit even harder. So it's just the nature of a lagging name. So that's kind of how I'll protect myself there. But the market's been great. I don't see tons to complain about. And, we'll see kind of the reaction after Wednesday. So.
Very well put. Appreciate you coming up on the stage and sharing some market sentiment
Of course, man.
thoughts. We are going to roll into our stock picks at this point. So our top picker from this past week with the updated data that I'm looking at now looks like a pretty clear win here. I believe that you won it recently as well, maybe even last week. Shout out to Nick Drendel. Look at that, killing it. Got 12.24% on BITX, which really ran today into the close. Got another 2.5% there on Kava, averaged 7.39%. Great job. What do you got for us this week?
Thank you. Yeah, it's nice to win back to back. I finally know what Michael feels like for the 16 weeks or something he won last year. For this week, I am gonna go with Kava again. Just continue that up. They have earnings next week on the 28th, so yeah, this full week like will still be included before earnings. I'm just expecting like that to continue higher, and a lot of the kind of fast food or not fast food, yeah, fast food restaurant names that have been on such a run just went sideways basically all of last week. So if we see some rotation out of like the tech names and then but stay in the market, I'm looking for CAVA to continue going up there. I know I mentioned Sweet Greens last week as like a backup third pick. I did buy that at the breakover Friday's high today. That looks awesome as well. So overall, I think like the restaurant theme is still a strong one, and Kava's been the leader in that group. So we'll just run that pick back. And then for my second pick, I'm going to go with AROC. The stock's had a really nice, about a month and a half long base, testing the 50-day twice, and then putting in a really nice pivot early last week and breaking out to new highs today on volume. What I'd be looking for here is today's gap up from Friday's close. If we pull into that area, especially if we do so in like 2 or 3 days while the 10-day EMA catches up to that, that would be a really nice like low risk entry point. And with these competitions, you just we're buying these the next day's open, and then Monday's closes decides the percentage. But the way I'm actually going to be trading this is if we see some pullback after making new highs into that 2067, 2065 area, I'll try to manage my risk on 1.5% stop with the 10-day EMA catching up there. So I wanted to go a little bit safer. I don't think that one's a super fast runner. Kava's relatively fast, but still not going to get blown out of the water based on what NVIDIA does. So I probably won't win week 3, but two names that I'm going to be continue to be focused on. And if we see any rotation, I think that AROC is going to be a nice one to continue to trend.
All right, we got 2 interesting ones here. Kava looking for it to keep going. This one has been on a bit of a rager. I believe it did hit new all-time highs today, closed at all-time highs. So let's see if it can keep pumping. Shout out to that. And then AROC, that was the other one, right?
Yep.
Yep, AROC. Similar looking chart. All-time high, well, maybe not all-time highs. I don't know if I pull back far enough on the data here, but looks like it hasn't been up here in a very long time, if it ever was. Actually, no, this looks like all-time highs pretty much on it. So poking through, or well, very close within cents of all-time highs. But a nice pop-up move here. Yeah, 2 good-looking charts. Really good stuff, Nick. Congrats on the back-to-back wins. You think you got in the bag for a third one?
I'll make that decision when I hear everyone else's picks. I don't think these are really volatile enough to get the win, but who knows?
Who knows? All right, Kava and AROC. Thank you to Nick. Let's go on over to our second place, which shout out was you, Ariel. You had 13.2% there on Hood. Nice move. And then Eli Lilly was pretty much flat, average of 6.5%.
Yeah, so I still love the weekly on Lily. So I will run it back on that name. I don't think obviously it's not the world beater. It's not very fast, but once it gets rolling, it could just be this one of these forever trenders like a Costco in my eyes. that is one that I love the look. I love the story. I love what they're doing, and everybody's familiar with their drug. And then for the flip side of it, if in case the market's getting a bit stretched, I am going to throw a short in there, and that is Affirm Holdings AFRM. I am shorting it in that name, and I've been short for the last 2 quarters. The name has been tightening up over the last, I would say, month. It's just really been going sideways, and it's pretty much hugging and laying right on the 200-day. I think if the market begins to show some volatility and we see some distribution, it's names like, and I hate to say it for anybody who owns them, but it's names like Affirm and Roblox, and I am short both of them since 2 quarters ago. They'll just probably continue, just those names will just get thrown out first. I'm not a big believer in the buy now, pay later. Just giving people money to buy things that they can't afford is the worst recipe for success. So yeah, Affirm as a short idea, and Lilly as a weekly long.
All right, coming in with our first short here with AFRM. This is one which certainly knows how to move to the downside when prompted. It's sitting on its 200-day SMA, bounced off of it yesterday, I believe, but coming back down to it today. So we'll see if we can knife through that. I have support for AFRM closer to $23 per share, so that's about a $10 drop from where it is now. Excited to see how that one continues to pan out. The other one there being Lilly, which did not move much in the last few days, but is still pretty much sitting at all-time highs. And like you said, been setting up here since February 16th. So quite the long-term setup. Let's see if it's able to get out of that pop. Any other thoughts there on those picks?
Well, I still am the believer that Eli Lilly is the first $1 trillion non-tech company. So I've been a believer of that, and trust me, I used to own shares down at $311, and I had a really giant position. And I sat in it for a few weeks, and it eventually stopped me out. So it's a shame to see it, me owning it so much higher here and not owning anything for the long term in it. But if this thing gets rolling over $800, I still am a firm believer that it's the first $1 trillion non-tech company. And, with the amount of sales that they're doing, I don't see how. I believe they have to get to about $830 for that to be the case. But yeah, it's a healthy long-term pick. I can't see too much volatility coming to that name.
Sounds good. Thank you, Aria. We got a couple of fun,
Thanks,
a couple of fun picks there. Thanks for coming up. Nice job last week. Okay, let's take it to the next level here, and that is going to be going over to. Well, actually, Paper Gains couldn't be on here tonight, but he did send me his picks. So I'm going to go ahead and I will read those out. Give me a minute to get to those. He said, he said double leverage Coinbase, which is CONL, which we have talked about in some of the past weeks. This one, especially with crypto, just pumping throughout the end of the day today, I assume is doing pretty well. I'll have to take a look at it in a second. So let me take a look. CONL. It's becoming a crowd favorite if you haven't heard of it just yet. Yeah, this one went up 16% today, so I would call that quite the pump. This is one of the if you're looking for volatility these days in volume, this is where it seems to be gravitating towards. The volume has absolutely escalated on here since the start of February. I mean, just look at CONL. Basically, 100% gain in volume pretty much over the last couple of months. So no low volume here, and plenty of volatility. You're having regular 15% moves on the daily. Back and forth here. So yeah, if this one crypto continues to go, I could totally see this breaking out tomorrow morning at the open, something that people are really going to be eyeing. So shout out to Paper, good pick there. GDXU was his other pick, so he's going for the win here. He's going for the leveraged. GDXU is really looking nice. It is now at 52-week highs, or right around there. Sorry, it's not at 52-week highs yet. It's at like 48-week highs, I suppose, because it's got about this 1 week in July last year where it kind of popped up and over the mark. But it is looking really good on GDXU. We've climbed out of quite the hole, and it's gone from $17 a share up to $49 or $48 in a very short period of time. Just about a little bit under 3 months, it's gone about 176% on gold miners. So shout out to the gold trade, looking pretty good, and to our friends over at Microsectors who do make GDXU as well. So 2 leverage picks there for paper gains. Okay, the next place was actually Andrew, who has popped off, I believe, but he did pick Baba again, and he picked Jumia as well. I haven't really looked at Jumia too much recently. I know it had a pretty big jump. Oh wow, yeah. So it had a big jump a couple of months ago, gave almost all of it all back, and it's back up again. So I'm curious to see what this one does. It was down about 3.5% today. All right, keeping it rolling over to the next stock picker that is going to be yourself, Jordan.
Ooh, I think I'm gonna keep it rolling with CELH. This thing just keeps going. It's ridiculous. Every time I think it needs a break, it just keeps on moving. So let's just run it back with that. And let's see. I'm gonna try Enphase long again as well. I'm gonna try it. I'm gonna try it again. So Enphase long, Celsius long, Enphase still in this consolidation. But holding these daily EMAs, I think at least for the week, it's in for a decent little bounce here. So I don't know. We'll see what happens. I'm gonna roll with those two.
Yeah, Enphase has been consolidating for forever at this point, it feels like, right?
Forever. Dude, it's got to break at some point. Either way, even if it breaks down, I'm fine with that. I'll play it short. I don't care. It's got to break at some point, man. The consolidation is so beautiful. Actually, it's very nice and structured. It's just at some point it's got to give. So I don't know exactly. I'm not exactly sure which way she wants to go. We got a lot of lower highs, but we're also holding, making higher lows on the higher time frames and kind of creeping up to some of my higher time frame EMAs here. So I don't know. I'm thinking it's to the upside whenever it does actually break and give, but who knows at this point. I'm not 100% sure, so we just got to play it by ear, but we're going to roll with that for this week.
Sounds good. Yeah, Enphase just been consolidating for forever. Celsius, on the other hand, pushing to almost all-time highs. Just a few dollars off of all-time highs here. Celsius had that drop down to 67. Everyone was getting all bearish on me, but real Celsius fans have been there before. We're now up about 43% in roughly a month and looking for all-time highs, as we know. Let's get it. Good stuff. Thank you, Jordan. Okay, let's bring it over to our next few predictors. So, Michael Naus, I see you already tweeted yours out, so I don't want anyone to steal them from you. So I'm going to come over to you here.
Good, because yeah, Nick already stole one. So
Well, he
for
did win
anyone
last
again
week, so
who
he gets that
doesn't,
right.
I know. But for anyone who doesn't know, I pick all of my stocks by algorithm. So I have a handful of algorithms that I run, looking for anchored VWAP stuff or relative strength or certain things like that. And by algorithm, I mean they've been back tested since 1980 until now to show some outperformance of the market, and then I scan them by eye. So for those who are following Nick, it's the AROC one. It is number 2 of the relative strength index. So take that for what you may, but it's up there, and you can't get much higher than that. So that's fantastic. That we both came to that from different schools of thought and different ways of looking at the market, and sometimes when those things happen, they're kind of serendipitous. So take a look at that AROC that Nick picked for sure. So for myself, I just went through, and again, I don't, if there's ever a story or anything behind these, I never know, right? I run the list at the end of the day, and it says, here's the things that you should take a look at. And I grab the ones that, to my eye, actually look pretty good. So the first one is AESI breaking out to new all-time highs today. With 10% short float, which is actually 8 days to cover. So it means it has a large float compared to how much it normally trades. 8 days to cover is pretty wild, and breaking out to new all-time highs. So I'll say it over and over and over again until people kick me off and no longer hear what I want to say. People who are short AMC are not worried. That was a $600 stock that's worth like $5 now. Right? You want to find things with good short floats that are making new highs, because then you know for sure those shorts are underwater and may have to cover. So AESI is one of those. Again, 10% short float's not crazy, but 8 days to cover essentially means that if all of the shorts started to buy right now and every trade that took place throughout the day was a cover, then it would take them 8 days to get out of the position. So that I like that one. It's a very good looking just cup and handle pattern on the daily chart, and then a break to new all-time highs on about 3 times relative volume today. Looks pretty nice. So that combined with the short float, and again the fact that it was just number one on the list, made it a no-brainer for something that I picked up on the close, and we'll call for this kind of competition. And then the other one, now that AROC was taken, is actually Hood. So I talked about this earlier. Full disclosure, I am long this one as well. I got a little bit today as it dipped under and went back through $20. But I do like the look of this one. I think that of the whole kind of meme pump and dump thing that happened, Hood is definitely going to be the one to gain from this. It had a great relative volume on Friday. I think it was like 5 as it broke out of this little pattern that I drew. Then had another 2 relative volume today as it continued, just showing that not only is there buying going on in the stock, but it is aggressive buying on increased volume. So a big push here on Robinhood as well. And I like the look of that one. Now, again, we're trading these for the contest, so we'll hold them anyway regardless. But with any breakout, if they fail, you got to be kind of out right away. So you have to say, okay, I'm going to buy this breakout, and if we fail kind of back below and close significantly below 20, I'm either wrong or early, and those two are the same things. So you have to kind of get out and move on. So that's AESI and Robinhood, which is HOOD. And as always, they're in the little purple chat bubble thing below there.
All right, there you go. He does post them below. You said AESI, right? Making sure I'm getting that right.
Yes, I'm dyslexic. Hold on. Yeah, AESI.
Yes. Okay. I was just making sure it's the Alice Energy Solutions. Yeah, energy's been on
Yep.
fire. This one's up 42.5% this year. They offer some services. They do propant and propant logistics. They are pushing through, like you mentioned, all-time highs. I believe that they hit all-time highs today. So yes, it's continuing to move, and it's in a hot sector, and it is a $2.7 billion market cap. So maybe still having a little bit of room to go there. Your other one being Hood was quite interesting to me because it's not necessarily something that pops up on these charts, but it is up 64% year to date. It did have another great day today, up about 3%. It's up 28% this week. So while I don't think of it like this, it is one of those hot movers right now, and it is actually up 146% past year, and it is 52-week highs. It is definitely not all-time highs, but it is 52-week highs. So Hood trading here over $20, held it pretty nicely, almost at $21 per share, which is what it popped up to. I guess technically these are 52-week highs, but it did pop up to that 21 mark very briefly back on, I believe, March 28th. When they came off of, maybe it was earnings or something, where they had a pretty good reaction. So perhaps it's not quite all 52-week highs, but it's damn near them right now. So very nice picks there. I'm going to go ahead and denote those. Again, those are AESI and Hood. Somebody asked, by the way, beforehand, was AROC long from Nick? It is long. He went long AROC as well as long Kava. So both of those picks were long. Okay. All right, we are going to come over to our next stock picker, Jaguar. I'm saving you, by the way, for the end. I like last week. I think that you had asked me to wait until the end so that you could be out of the car. So I'm just going to go to EMP, and then I will come over to Jaguar. EMP, you got a couple of picks for us here?
Yeah, I feel like I've been on the fence with this. I think I've got to do it. I think I've got to go NVDL, double leveraged NVIDIA for the earnings play until they prove us wrong that they're not going to beat and raise. And Jaguar made a good point, and I do have the concern there that, if they don't blow it out of the water again, then yeah, it could be a rough report. But until they prove something different, I just have trouble betting against that name. So I think NVDL, the 2x leverage Granite shares. For NVIDIA, I like that one. If you would have asked me yesterday, I would have said Netflix. I think it ran far enough today that I'm a little gun shy on that one, but I like Caterpillar, ticker CAT. Just got back over the 50-day moving average, breaking out of it's on the daily or weekly. It's kind of got a little bull flag here, so I really like it as a setup. So I'll take Caterpillar, especially with how strong a lot of these down names have been recently. So NVDL long and CAT long.
All right, very interesting. So yeah, we can dive into this for a second here. NVDL has been on absolute fire this year. This is the double leveraged NVIDIA from Granite Shares. And I'm glad someone here is playing with the NVIDIA, throughout earnings here. NVIDIA is up 193% year to date. So this is a soar of a name. Absolutely can move. Even just this past week, it's up 11%. In this past month, it's up 42% on NVIDIA. So if you're someone that's looking to play NVIDIA throughout earnings and you do not want to have to touch options, I genuinely believe this can be a great alternative for you, right? You're not going to have to deal with theta decay. If the stock gets wiped down 10%, you're not going to lose all of the money that you put in. But, if it does have that bump to the upside, you can, let's say it goes up 10%, that means NVIDIA is going up 20%, right? So there is still some money to be made there with some of these double leverage plays. And this is a highly trusted one. It's got almost 2 billion AUM inside of it. So if you're looking for the tool that people use to play around with NVIDIA and not have to get exposed to the options chain, this is what it is, in my opinion. So very fun there with NVDL. And then the other one that she threw out there was, let me just double check. It was, what was the other
Caterpillar.
one? Caterpillar. There we go. All right. I don't think anyone's called out Caterpillar on here in a while, which, by the way, I will say that Netflix chart, I actually still think does look pretty decent. And Netflix is breaking through. I'm just going to take a look at the chart for a second.
Yeah, I think Netflix does keep going too. I was on the fence about picking that one. I just don't know if it maybe back tests for the next day or two before it continues. And so that's the only reason why I was like, okay, by the end of the week, I don't know if it gets an outsized move, but it looks like it's going to get continuation too. So I like that one as well, but I'll stick with Cat.
Yeah, what a comeback story for Netflix, though. This thing was trading at $700 back in the peak of that COVID run, November 16th, 2021. It traded at $702. It dropped then all the way down to $163. That's pretty crazy, right? 700 to 163 is a 76% drop. It has since gone up almost 300% since then. It is back to $640, and it is trading at 52-week highs right now today. It did push right into them. So that's just absolutely insane. When you look at how fast it came down as well, it had one day where it dropped, believe, I think this was in earnings where it dropped 21%, and then they had a second earnings later on where it dropped 23% the day of earnings, 37% within 2 days, and it dropped 45% in 1 week and 2 days. Just absolutely crazy how fast it took the elevator down for Netflix. And then all of a sudden, you give it some time, and it took some time, right? That was in 2022. It's been 2 years since the bottom. May 17th of 2020, or May 12th was the bottom in 2022, and it's all the way back up to here. So just crazy. But I will say, just something I wanted to point out. And then Caterpillar, this one looking pretty solid as well. It's come up from 226, trading at 362. Solid looking chart, in my opinion. Here, this is more of a stalwart, right? Caterpillar's not going anywhere. Pretty solid, and I think they had like pretty much all-time highs when they were at 380, so they're not very far off there. Okay, all right, really fun with all the picks. Jaguar, do you got a couple for us?
Yeah, while I'm doing my 10,000 steps walking in this dog park at the same time. And I'm on my phone. I just posted something in the Nest. This is Vericel. This is what Jag's research looks like. This is my first pick, VCEL. The entire fundamental bull case is right in that tweet. You can either look at the image or you can just click on the link, which is a PDF file that will give you the full description behind it. Now, we have been behind Vericel since January, actually, and on multiple occasions, we have refreshed the bull case in front of our clients, and each time we have recommended just owning the stock for the long term because we believe that this is a double-digit grower for a long period of time to come. It's coming off a very, very strong quarter, which is a reflection of a strong launch that took place about 6 months ago. 25% top line revenue growth, and I believe that will continue. And I think there's a lot of re-rating potential on the street where you will see more analyst upgrades and many of that. So this is, not necessarily a pick for the week. I don't even know if it is going to work this week. And I know this is a weekly contest, but if you look at the chart, it's been grinding higher. Today was a very strong day for the stock, and it started to break out from the base. I think it's going to gradually return to new 52-week high. So I like the name VCEL. I'm going to skip a lot of the fundamental discussions around this because the entire file is provided to you right there in the tweet that's in the nest. So check it out yourself. So that's the first pick, VCEL. The second stock is a more catalyst driven trade, and that is Medtronics, another healthcare stock. Symbol is MDT. Medtronics. Medtronics will report earnings on Thursday before market opens this week. I'm expecting company to post a good quarter. Now, here's the thing. It's all about the game of expectations, right? Whenever you're going into an earnings report. And understand that trading anything around earnings has always this element of speculation that's involved, right? So anything is possible. But I believe the consensus is just too low here. And I think there could be enough firepower in the earnings call to create some excitement around this stock from the management. And here's why. First of all, when you take a look at the 2-3 year chart of Medtronics, it has not done much. I mean, it has been just sort of like a dead stock within the medical device business. It comes up to this $85 to $90 range. It tries to break out every time it fails, and it kind of just like rolls over and goes right back down to about 80. Now, on the game of expectations, the consensus is modeling about 4.4% organic growth this year, 2024. But the read-through that we got from Johnson & Johnson earnings report, which overlaps many of the same products that Medtronic sells, was 6.5% organic growth in Q1. I think that's a very positive read-through for Medtronics that could potentially cause the stock to get re-rated higher on the street if they post or guide something similar magnitude as Johnson & Johnson. That's the number one. Number two is the margins. I pay particularly attention to gross margins. And whenever you start to see margins inflect higher, that typically results in stock getting re-rated higher on the street. In this particular case, last year in September, you have to take a look at the earnings call. And at that time, management basically started a big restructuring program that involved, basically cutting out a whole bunch of business divisions and narrowing down to a couple others. It involved layoffs, and it involved a whole bunch of restructuring initiatives. Every time now when they get on the earnings call, they talked about how that has been helping improve their gross margins. They've set the guidance for 200 basis points of margin improvement. I think they can beat that. If they do that, the stock will get re-rated higher on the street as well. So I think there's a setup here. The company has enough shots to take at the goal, and only one or two of them have to go through for them to basically catch the street's attention. Let's see if they can do that on Thursday morning when they report earnings. So I like Medtronics. I'm long going into earnings, and I like Vericel, which is in the nest. And that's it from me. Thank you for having me.
Appreciate the full breakdown there, Jag. Yeah, Vericel coming off of earnings just about a week or two ago, looking pretty good here, pushing for new 52-week highs. Big candle up today, 5.69% on that candle, trading at $51 here. I don't know much about the company, but like you said, I don't need to because you put a full write-up on it right in the top of the space for us. So I encourage everybody to check that out. He also mentioned Medtronic, sorry, which is MDT. They had a bit of a down candle today after a real nice run that they've come off of here, going from 78 up to $86 per share, pull back to 84.5. Let's see where this one goes. I am familiar with this one. I do know it can make these big runs. I've seen it go from like $70 to $90, but curious. And obviously, like you mentioned, they do have earnings coming up too. So perhaps that is really the play here. So really fun. Just going to run through these picks for a second for everyone. We had from our champ this past week, Nick Drendel. He ran it back with Kava. He also picked AROC, which is a super bullish looking chart. Ariel, who's up here, who gave two great picks last week, picked LLY as well as short. AFRM took our first short in 2 weeks, our only short in 2 weeks. Ace the Kid had long Celsius and EMPH. Jaguar went long VCell and MDT. EMP went long NVDL and CAT. Michael Naus had AESI and Hood, and Paper Games was long CONL and GDXU. So those are our picks from the week. I did just post that to my page. I encourage you, if you're in the audience, take a second, go ahead and just bookmark that post or engage with it in some way, shape, or form so you can easily find it for the week ahead, right? There's always some great picks. If you looked at it last week again, everybody was green. I mean, we had a really, really great week of stock picking, and we beat the indices by pretty much like 100%. So excited to see what is able to be accomplished this week. I always encourage you to follow the speakers that are up here on stage. I have a super fun space, by the way, coming up in a minute. The theme of this week is AI, right? And GPUs, because NVIDIA is reporting earnings on Wednesday. So we're going to do a full hour here after this talking about the world of AI and GPUs and everything that's going on there and things that are being built. There's some really cool stuff coming up that you can be looking forward to. So I do encourage everybody, stick around with us for this next hour. But for now, big thank you to Jordan, Michael Naus, Jaguar, everyone else was on here. We had Nick Drendel, Andrew, just a fun stock picking panel. Ariel came up, Emp was up on here. So super good stuff. Appreciate y'all. We're gonna get ready and rolling into this next space now, I believe, and talk some AI for the next hour here. So stick around if you are thinking about, NVIDIA earnings coming up this week or anything else. This is going to be of a lot of interest to you. Toki, I see you in the crowd. Kyle, I already have you on stage. DeFi Cowboy, I've got you on stage. AIGPU, I've got you on stage. DeFi Cowboy, I'm dropping you the co-host invite, so you can go ahead and grab that if you'd like, and we'll go ahead and get right into it. Let me actually turn the mic over to you guys just to get us started here. If you want to give just a brief introduction off the bat of who you are, who we're listening to, I think that there's a lot of people here that are super excited to talk this topic with NVIDIA earnings coming up in 2 days.
Yeah, first off, happy to be here. There's a pretty big team. I happen to do a lot of the talking on these spaces, and but to give you a bit of background on a few of the founding team on our side, we're all early blockchain adopters, circa 2012, 2013. I first got in with ETH, sub $1, met some of the founders at ETH, and it was an interesting story that led to advising at several companies. Not all were successful, but that led to a career in consulting. And then I got into an ownership role in a company that does research and development. So just been building and building and building tech in different domains over the years, wearing different hats, and kind of learning this market as it's grown. And we decided to dip our toes back into the token space because of the project that we're doing. So just keep it light in that respect. And if you have more questions or more detail you're looking for, I can get into it, or we can just kind of let it all unfold organically.
Yeah, I think it'd be good. It'd be helpful probably, unless DeFi Cowboy wants to, speak here as well. It'd probably be good to start with a high level overview of what it is that you're building, right? So just so people understand here, how does this fit into this world of AI? And I would ask that you do it, in terms that, the everyday investor can understand.
Pretty simple. First off, the token is nothing more than democratizing the investment opportunities. So I would push that aside for the second and focus on the AI and the GPU within our name. So we're effectively optimizing compute resources to bring a lower price and a better product to either generative AI companies or companies implementing AI, as well as the potential for government contracts, which we have a background in. So a B2B, B2G, business to government model is more of our focus, less B2C. So we buy our GPUs, we implement our own software, we're able to increase performance of these GPUs, as well as adapt non-AI GPUs to AI tasks. And we can get into more of that as well. But the baseline is that every AI company, doesn't matter if you're a solely AI company or you're implementing AI, you need a cloud that can facilitate the service of your products. If you don't have that, their products simply won't work. So our whole point is bringing alpha into the market with a superior product at a lower cost. And we did that with a client already in a proof of concept. So we can dig into that as well. But it's a introduction.
Yeah. Walk me through the use case and the proof of concept.
So we really wanted to prove something and that was, can we configure non-AI compatible GPUs to handle AI and machine learning tasks? And so to give you a bit of the proof of concept, what we did was we took a client from a discounted deal with a large chip manufacturer, one of the majors. They were paying 300 grand a year. We were able to migrate them to a custom stack where we actually took 9 RTX 4090s. These are gaming GPUs. They will not work for AI out of the box. And we were able to strip off all the software, run 9 of these gaming GPUs on a single motherboard, which I would challenge anyone to find someone doing that. And then create a stack that gave them a lot of headroom to grow. I mean, they were paying 70K a year with us when they started. Their 100,000 users at the time were only clocking 22% of the available resources. They've since grown in about 7-8 months to 200,000 users. So they're roughly running about 40% of their available resources. And as a result, I mean, do the math, right? They're paying 300K, they're now saving 230K and a year, and they're able to grow 150% after doubling their user base on a quarter of the cash. So that's our proof of concept.
Awesome. I see we already got a hand up. Go for it, Action.
Lots and lots of questions. Can you run that through by me once again? I just didn't catch those numbers. It was cutting in and out. You're saying 4 GPUs on a single motherboard? Is that what it was?
9 RTX 4090s on a single motherboard.
9. That's beautiful. So essentially, are you able to leverage the entire memory from all those GPUs and essentially run large models as if it were one? Is that the idea?
It's a little okay. So I want to be very, very clear. I am not a developer. I have a partner who's not with us who created the IP when we were on a government contract. So all I can tell you, the best way to explain how it works is how we reverse engineered it from my perspective. So, and what my partners told me. So when we were on a government contract, this is where we figured this out. We were building a threat detection software for a police force where they needed to be able to use public cameras for threat detection. So this is a computer vision product, being able to see something through physical cameras and then with compute understand what you're seeing. They wanted to do things like check if someone's carrying a gun under their shirt or if their face matches with warrants, things like this. What the challenges we faced was that we were dealing with existing infrastructure that was not optimized to carry this load. We had power limitations, infrastructure, as well as compute limitations. And the only thing that we could do to solve for X was look at the software. And that's when we had to go full stack. So we deleted everything, had to start from our own custom drivers, our own custom operating system, then overlaying machine learning tools such as compilers and effectively be able to net that result where we were able to carry that new load. And in doing so, realized we could upgrade any compute resource. So obviously with the trend in AI, made a lot of sense for us to focus in that direction. Now, in terms of how that's done, there's a barrier of IP leak and also a barrier of my own knowledge and understanding at an expert level to explain all the technicals to you. So that's pretty much what I can say at this point.
So I'll tell you what, I'd rather have somebody tell me that than try to make something up on the spot, because I usually crush people when they try to make stuff up on the spot. So man, that is the best answer you could have given me.
No, I mean, it's a reality, right? Like it's just what we did. And then, right, we all play our own roles. As I mentioned in my background, it was advising to consulting to R&D. You know, I've learned system architecture through client development projects, but I don't touch keys. I have really smart guys that handle that. I handle the biz dev, strategic dev, and kind of these kinds of conversations I'm a bit better at, I think, than some on my team. And they're way better than I am at the technical stuff.
Then you got the right people. You got the right people in the right places. That's what's important.
Yeah, and we can move quicker that way. So we've learned over the decade together. You know, it doesn't have to be ego. We don't all have to know everything. Let's just lean on each other for what we're good at.
Really good questions. I know this is right up Action's alley. Lady Trader, I saw your hand go up second.
Hey, thank you so much for having me up here. Hey, AI GPU team, I've been looking into your project. I want to know a lot of details about it. And so, first of all, obviously want to learn more about your backers, want to learn about tokenomics and things like that. And I would also like to mention, I am coming from a lot of, I have a lot of concerns about any of the projects right now that are coming out with GPU. Whenever I see that word GPU, I am like, okay, what is going on? A lot of them actually, some of them that are raising funds right now, not the best projects when it comes to like what they've actually built, right? There's a lot of scams happening, some really inflated valuations too. I know one of the projects tried to raise, I think it was like over 1 billion market cap that they were raising at. And then it came out, a lot of information came out about them that they were actually, not what they were actually, telling people.
Yeah,
And,
yeah.
so
There
you
goes
probably
Lady
heard
Trader talking about IO.net again, but she won't tell you who it is because she's too
exactly. I mean,
kind.
IO.net
Don't give
nightmare,
away her
right?
secrets.
So Martin Shkreli did actually a really good overview and exposed them on what they were actually doing. Was very concerning, and how they were scamming people. Essentially, it was just horrible, right? And so I want to hear more about your project, your valuation, backers, what you're doing, just so I can do some additional research and also pass this on to my community.
Yeah, no, it's great. I think like to set the stage here, it's really important to look at what's gone on in the market and also how we view it, as well as how we differentiate. So there are quite a few of these AI GPU plays, and or however you want to call it. One of the big things is when you're dealing with these decentralized networks, like, I don't want to name names, but you guys know quite a few out there that have reached 150, 300 plus million market cap. You know what? It's all good. Look at Node AI, for example, ticker GPU. Like, when you're dealing with a decentralized network, you can't possibly scale, period, because you can't upgrade what you do not own. And standing in the middle as a company between two users that either own a GPU or are seeking to rent one by the hour is, in my opinion, very let's just say low-hanging fruit. So it makes sense to move quickly in that direction when AI is a hot ticket item. The token market was good. I get it. I just look at it as market validation. I look at it that this is something that can be done, a token with a strong AI business. But what I'm not seeing is a strong GPU farm or data center that is really showing some strong staying power. And that's not to show my own stuff here, it's just my opinion. So how we're different is we are centralized, right? We do take ownership of our own assets. We do put intellectual property on top. We are locking in clients, much like your cell phone bill or your rent on your apartment if you have a rent, a year or a multi-year contract. This gives our company, longer term solid projected revenues, but we're also smaller than some of these bigger data centers out there, so we can offer unique not just cost but like actual billing strategies. So our clients can sign up for a year, but they can pay monthly to help them be conservative of their cash. Let's say it's a generative AI company that has a huge bill, but they just raised $1 million or $2 million. They're being really conservative. We can make a custom plan that really helps them spend what they need as they need, to an extent. So yeah, I mean, it's really like a real estate play. We're building luxury real estate, but charging like the cost of a normal apartment, if you want to frame it up that way.
So
I know,
yeah. So we will be able to essentially compare the price of what you're offering, because I know this was another area that we were looking into for some of the other companies where they were actually charging people more, and all of the KOLs were on it, and they're like, "Hey, look at this! It's the GPU place, the next NVIDIA." And That's what basically everybody was saying, right? And then when you look into it and you compare the price and you're like, okay, why can't I just buy the GPU because it's cheaper than actually getting this through this company, which they've really inflated the prices of that as well.
Right.
So that's not going to be the case with AI GPU then, is what you're saying.
No, exactly. And also, like, when you take ownership of the assets, there's a lot you can do, including one of the biggest challenges in scaling a farm like this is supply chain. Like, you've got people like Elon Musk saying AI or GPUs are harder to get than diamonds, but it's important to note that not all GPUs are the same. What he means in that statement is AI compatible, ready to go, plug and play out of the box GPUs are very hard to get. But we don't get stuck in that supply chain because of what we proved in our proof of concept. We can convert gaming and 3D rendering GPUs to handle AI and machine learning compute tasks. So while others are kind of scratching their head figuring out where to go, we'll be able to be very dynamic and agile within the supply chain. Plus, there's a lot of partnerships that we have in place for supply chain scaling. But yeah, that's one differentiator as well.
Thank you. And then also, it does seem like you guys will be doing a fair launch. So
Yep.
why a fair launch? Why not going through the traditional VC fundraising with different rounds, right? Plus then the IDO, the traditional IDO. Why doing fair launch? Because a lot of times fair launch is not always looked at favorably from the investors, right? Because we want to see good backers from the get-go, right? We want to see big names tied to the project. Fair launch is mostly almost like a degen type lounge, right? And I'm not saying anything like necessarily wrong with it, but most of the time people are like, oh no, they don't have any backers, so we probably don't want to invest. What are your thoughts on that? Are you guys still doing the fair lounge? Are there any, like, do you do any kind of early rounds at all with this project, or is it just going to be a fair lounge?
Yeah, so the way that, again, that we're structured is we're self-funded and we don't really need the money. The second part is so here's the thing. We look down both paths, equity and private equity, VC funding, etc., but also the token route. But there was one big partnership that we made that kind of changed the dynamic full stop, and that was with a Indian nation, a Native American Indian nation, if you will. Now, this is a very unique Indian nation in that they are the only one in North America that did not sign a treaty with the US or Canada. So they've actually preserved their sovereignty at the highest level, meaning no deals have been struck with government, no numbers like socials or deeds on their property exist. They purely own what they own, and it's recognized at the United Nations as an independent nation, which is a sovereign state. So when we decided that, we realized there is a lot that we have to learn about the legal, I guess, landscape, like with the Native American status. And for that, we don't even know if we can have VCs and funds or whatever come in and sign the necessary agreement they'd need. What we've structured are a few partnerships outside, like with a particular venture capital fund that's involved in crypto solely. Like, they've just been stacking up SAFTs recently. And these guys are like 50-year-old plus rainmakers that, I'm sending my co-founder, who is the brains behind the operation, that are going with these guys to Consensus and the huge enterprise conferences. And they're going to go, hunting for those big ticket clients and partnerships. So that structures through, SPVs. So we have SPV set up with a service level agreement that connects from company A to company B. This is a kind of solution that allows us to take hedge funds who are looking to get into AI and say, hey, I'll earmark X millions of dollars. I like this play because it's asset backed. I like that there's a real business, and I like that, it's already profitable. Then we can hedge their capital in through that service level agreement where we are the managers of the metal and the facility and the premise, and they are simply the capital vehicle, if you will, to enhance growth or whatever we're looking to do. So It's a very interesting question. In terms of fair launch, I look at it the other way. You know, if we did a private sale and a pre-sale and all these things, number one, we're going to start with a really high valuation. So when you guys as retail investors look at the multiple on your cash, if we launched at 100 mil or 50 mil or whatever, now you got to bank on us going, 500 million to $1 billion before you'll see that 10x. And in this case, since we didn't need the money up front and we are already in production with our business, we saw a unique opportunity to have a much lower market cap upon launch, giving the retail investors a very clear path to seeing, that 5-10x without having to go to some crazy level of absolute success before they can realize those gains and subsequent liquidity to facilitate that. So, for us, this is about timing and positioning. We are going to be launching on base. We think it's going to be a very premier L2 moving forward. It's going at a staggering rate of success right now. And I think being one of the first blue chip projects there is going to be a unique story that sort of tells itself over time.
That's amazing. I have one last question. I know there are so many people with a lot of questions. For the tokenomics, I was actually looking at your website in the white paper, and it does seem like you guys are going to have buy tax as well as sell tax, which I know usually the buy tax side, that's something that's not looked very favorably by investors, right? We want to be able to buy without any tax. Sell tax, yes, makes sense, and even that one is like a bit of a deterrent, but not as big as the buy sell or the buy tax. Is this still going to be the case? And also, how do you justify that to investors?
Yeah, 100%. It's about the full financial loop. And I think if you look at, one end without seeing the other end clearly, I think that assessment is pretty fair. But let me walk you down this path. So first off, within the tokenomics, everything in there is subject to some change. I want to be very clear. It could be 5% buy, we might drop that down. It could be 5% sell, we might drop that down. Depends on what the market is willing to tolerate. So it's not necessarily set it and forget it, although we do intend on starting there, and there is a chance that it doesn't change. The benefit to this tax is that we can fund growth of the business. We can go buy more GPUs. We can pay for operating expenses. We can pay for marketing and all these different things that are necessary to run a real world business. Now, on the backside, the way it comes back to you guys is that right now we have earmarked 20% of our profits are going to come back to the token holders in a buyback method, right? So we'll be buying back and burning tokens on a regular basis, monthly, quarterly, what have you. And that'll create deflationary price pressure on the token as a reflection of the physical work of the real business that is now taking the revenues and profits, sharing them with the token entity to say thank you for those fees. It's like, yes, we are going to need these to build the business. However, it's going to come back, fourfold in terms of the, percentage back. It might not equate that way in cash, but we'll see how it works out. And this also gives us fluidity and transparency, financially speaking. So when we order GPUs, we will be able to take custody, take photos of the serial numbers and the unboxing and whatnot. And at that point, you guys are still going to have questions and say, how do I know those are really your photos and videos? So within a couple weeks, we'll launch one or more servers, and then we'll do a proof of compute. So we'll process some files. We'll send that hash of compute to the community, at which point you can see how much money we've taken from tax revenue, how much was spent in this tranche for GPUs, and how many GPUs we have physical custody of, and proof of that the serial numbers match up in both the photos to the actual hash of compute. So it kind of just goes full circle.
Thank you so much for answering my questions.
No, my pleasure. Thank you for asking them.
All right. Someone who I know has been excited for this one. Kayla, what's going on?
Hey, yeah, I love decentralized compute. And, you know, obviously, like it's very expensive right now. So, two things I want to ask. Who's your client and how do you plan on getting the GPUs to keep it decentralized? And, because, you know, I mean, there's a lot of competition. So do you plan on there being an arms race of sorts?
Well, we're not decentralized. So decentralized like compute resources won't scale to meet AI's performance needs. You can't, you're relying on people in a very, very loose manner to fulfill a need. That's why those companies doing decentralized compute are purely B2C. And we might have a B2C option open up down the line, but really we're more strictly B2B and B2G, so business to government, business to business. So we make money in two ways. Either a business hires us on an annual or multi-year contract to lower their bill and give them a better cloud for AI products, whether they're a generative AI company or an institution implementing AI tools. The other option is government contracts. These are one-time windfalls, large budgets. We have the top secret security clearance. I do not. I'm going to be very clear. I do not have that clearance. Two of my co-founders do, as well as our cybersecurity team that currently is contracted for the private cloud security at top U.S. government agencies. So realistically, we're centralizing the servers, but we're decentralizing the investment opportunity with the token.
Interesting. So I've written government grants, and it's tough to keep those contracts. Not saying it's impossible. And sometimes when you get government contracts, you can get them forever as long as you're like keeping all up to standards. So what does that look like?
The reason we closed the contract for private cloud security is because we've had a bug bounty open for 10 years running on our tech stack for what's called like, wow, why is the term slipping my mind? It's like malware, but also when you can hack into a system, plant some seeds, and then
Vaporware,
malware, things that can encrypt your whole system. So for 10 years running, no one's been paid with like $1 million bug bounty. That's what got the attention and closed that contract. That was before we bought the company. We bought it last year, we bought over 50% because we wanted to be able to take that same government grade security into this company.
So I'm curious what the congratulations, by the way. That's a really big bounty. But I'm curious, like, what does that relationship look like? So are they like in control of some of this, or is it
No.
more like they're utilizing your tech?
I own a research and development company, so underneath the portfolio of the holding company is a cybersecurity company and a few other tech companies. So it's just a company that I have equity in that I'll be using as a service level agreement for cloud security and cybersecurity. So they'll be paid. Yeah, they'll just be paid to secure things and keep it safe.
So the it's more about security, right? In this,
Yeah, because
like
when you deal with like huge institutions, like multi-billion-dollar companies, they don't care as much about the cost as they do the security. Like they'll pay more if you have really secure tech because they have serious liability. But when you're dealing with generative AI companies, it flips the script. They're like cost because their cash is so important and they're new. So we just wanted to be able to cover both bases and having that background, with an R&D company and dealing with the long slug of government contracts or the, forecast of this year, maybe even next year when you're dealing with an institutional buy cycle, everything's slower, but if you can make people's lives easier and get them to market faster, but also safely, you can sometimes accelerate these turns and closing times.
I want to add to that too as well. I mean, we're not necessarily reliant on government contracts, nor is it going to be the bulk
Correct.
of what we're doing. It's much more of an auxiliary thing we can do because we have the capability. There's a very real possibility we may not even venture into that sector, but it's something because of the experience of our team. We have an open door to bid and receive a lot of those grants.
Yeah, and open doors is the key, literally. pun
Mhm.
intended. But I guess my last question, like, I guess, is like, so how do you get? I'm very like concerned with like lack of GPU access and just like fair things in the future, especially because I've seen how it works at the top, you know. So like, how do you know that you're going to be able to compete with like buying GPUs and keeping that funnel?
Yeah, a lot of that comes down to again, like what our IP can do. So a huge part of what we can do that helps us stand out in that particular challenge, which is supply chain, is we can convert non-AI GPUs to handle AI tasks, such as what we did with our proof of concept. So I'm not sure if you heard this, but we were able to take multiple gaming and 3D rendering GPUs from NVIDIA, strip off all the software, put our own software on top from the drivers up, and our own custom user interface and OS and everything, as well as machine learning tools. um, some are, open source, some are our own private code. So, we don't disclose too much about how it fully works. But um, what we're able to do is not get stuck in that supply chain where others are, scratching their heads, waiting in massive queues and lines for the next eight H100s off the line. We can go to the RTX 4090s and RTX 5090s in the gaming and 3D rendering sector, buy the crap out of them, extract, put our own tools on top, configure servers for AI, and deploy and get clients. So another way is just in the last 30 days, we have had, I don't want to, this one I really won't say names, but we have had one of our biggest quote unquote competitors, if you will, come to us and offer us a deal where they put all their GPUs on our Indian land. And I don't think we're going to take it because the business model wasn't very sound. But we also have other people that are just as fed up with the compute market and not finding a good solution for their AI products long term, that have come to us and said, "Hey, we'll give you our whole allocation with NVIDIA or AMD or wherever, and you just make sure we have enough metal at a nice discount for our products to run forever, and we'd rather you do it than us do it." So there's a plethora of conversations that have been coming up organically. We also have advisors that have serious supply chain relationships that could help us with some really unique things, such as ordering lower volume GPU orders at like a high volume discounted rate. So it's become very diverse. But I agree with you. That would be a main point that we would be concerned with. Although I would close off that thought by saying very clearly, I'm not trying to become the next Amazon. Like, we do not want to be the biggest, baddest, craziest thing. We want to focus on high quality clients that we can build long term relationships with and forecast that revenue for years to come. And in doing so, like, we've already secured 10 to 12 clients. Three are like, one is absolutely going to happen this year, and that's again in partnership with this Indian nation, and that'll be a digital casino. So that's a guaranteed client, and with a very large budget that will keep growing as the business does. So, I think it's just about, again, I really like Elon Musk. He says build better products, right? Just build something better, people will pay for it. Now, if we can build something better and do it cheaper and with the same security people want, also with the dynamic ability to build on prem, so we can build on premise for a client like an institution and then manage remotely. So that's interesting as well if they have such security standards where they need this physically at their location. So I think we're just going to take what we've learned and seen from these other GPU plays and just do something better that has a lot more staying power.
Yeah, I love that because that's market research and development, of course.
Mhm. Yeah, great questions.
Hey, Toki, what's on your mind?
So, thank you for having me up today. This has honestly been a pretty cool project. I love learning about all the new AI that's available out there, especially because it is such a versatile tool, and it's
Mhm.
something that genuinely I don't think that a lot of people really even are able to grasp completely what all it can do, because I feel like even ourselves, as we watch all of these different AIs come out, we don't even know what their true potentials are. So when you're trying to get into like AI GPU stuff, it can be a harder concept, I guess, for people to understand, because they don't always understand what it's used for or why do you need it. But what honestly do you see as someone really bringing this to the table? Like what would you see as like your average user base, and where do you see them actually building out from here?
Well, I'd say it's more of a client base than a user base, right? Our clients have users, but we don't. So we're simply your Verizon for AI, right? You're going to pay us that bill, and we're going to make sure that your cell phone, or in this case your AI products, work really, really well on your website or your app, and we're going to do it at a lower cost. A bit more into this is like, the key is faster generations and faster cooldown rates, right? You want to generate things faster. So if you have a product where you want to use a prompt like ChatGPT, and you want that LLM, or that large language model like ChatGPT, to go and scour the internet or a multitude of vast databases very quick and give you an answer in less than a minute, you're relying on speed, and that's what AI really is. At its minimum value is, or I'd say, like, yeah, it's baseline value that AI has right now is speed. It's high frequency, high volume compute. So when you send a simple question like how to make the best sandwich, and it needs to go now scour all the different things on sandwiches and come back to you, if that hits a server, think of it like your internet. If you have crappy internet, that's going to take forever. But if you have really, really, really good internet, if you want to call it that, it's going to flow through super fast and give you that user experience. So, this is why we see huge staggering projections on the AI infrastructure market, because like Kayla said, right, there's really difficult supply chain constraints, and you've got BlackRock, you've got Tesla, you've got mega multi-billion-dollar institutions begging for more allocation, and just not getting it, because these companies like Nvidia and AMD have done a great job at creating a fair market opportunity, so we don't see a repeat of the real estate industry, right? Look at BlackRock right now. These huge hedge funds are being forced to offload their real estate, the residential real estate, because they've been controlling the market and jacking up rents, turning properties that were once owned into properties that are now only rented. And now they have to undo all that mess. So to avoid it from happening again, these big companies like Nvidia and AMD deserve a pat on the back for shepherding that mission to make sure guys like us can actually pop up and offer some alpha in the space and drive some competitive pricing.
Really good questions there as well. Sorry, Toki, do you have something else?
Yeah, I guess from there, when you're talking about this product and what you're looking for as far as like potential clients go, and how you're going to be using it from there, what's honestly stopping some of these other big businesses from just buying out companies that have already gotten their allocations? Like it's not without due process to know that some of these bigger companies can definitely get a hold of GPUs a lot faster and a lot easier than smaller companies. So what ensures that you guys are going to have a really good chance in all of this?
Well, two things. One, they'd have to figure it out. Two, which isn't impossible, right? They could figure it out. But then two, they'd have to find a sovereign partner that removed all of their tax implications like we did in order to compete with our pricing. So even if they figure out our sauce, they're going to have a 35 to 40% delta on tax that they just simply can't meet our pricing. And I guess a third component would be, there is a potential that, without sovereign protection, you could get some sort of a letter from an NVIDIA that says, hey, we don't actually allow you to do what you're doing. And therefore, again, without sovereignty, you really don't have a hedge against that.
Also, to add to that about the hardware side of things, we have some friends in pretty high places that can give us those allocations. So without having to be a large consumer ourselves, we can kind of piggyback off of some of those allocations. when we need to. So it's definitely it's a larger issue, but thanks to our wonderful advisory council and a lot of the relationships we've built, we're not too concerned with acquiring new metal at any staggering pace. And like Meister said in the beginning, we're not looking to be the next Amazon. We're not looking to be the next mega conglomerate of GPUs and services. It's more niche, and how can we optimize the applications and the utilities that we do have on base.
Okay, so without that sovereignty, there's just a lot that goes into hand with the other companies kind of needing to really do a lot more work in order to compete. So I understand where you're coming from now. Thank you for explaining that portion to me.
No, of course. Thanks for asking.
Okay, I'm not gonna lie. I think your hand was up, Mona, first. I also think I saw one of Sensei's hands go up and down. I'm gonna come to Mona first.
I wasn't looking. Lady Trader, you good with that? I don't want to jump the
Yeah,
line here.
go ahead, that's okay, Mona. Go ahead.
Thank you, thank you. Thanks for having me, guys. You said something pretty big earlier, and I'm not gonna skip what you said. You said you're positioning yourself as a Verizon of AI in the real world, and everyone who knows me, they know I speak on behalf of the mainstream and the real world. So help me understand in practical terms, how in the world are you going to provide that level of reliability and widespread access, and not to mention tackle scaling? I want to know your scaling solution.
Yeah, that just to be clear, that's not what I said. I was using a comparison to how you pay your bill for Verizon to how you would pay your bill with us. But to be more clear, like I don't want to be Verizon or Amazon or necessarily like a 100 billion trillion dollar company. If it happens, it happens. I'm focused on a very different model where we're not trying to service the entire world of everyone looking to render a file on a GPU by the hour. This is going to create more of a white glove service for the higher ticket clients that simply have nowhere to go right now. And they can't go to decentralized networks. They can't go to Amazon without making huge sacrifices in performance. And smaller shops are popping up, like us. So the idea is to give the clients what they want and need. What they want and need is a super secure, super fast cloud to run their new AI products. And if they don't have that, it's all going to come crumbling down and hit a bunch of bottlenecks. You could have the best AI product in the world without the right server. It's not going to perform at its peak. So what we're doing is looking more toward those clients, right? And like we did in our proof of concept, it began with a series of deep interviews to assess what are your actual needs for the term of this contract. How many users do you have right now? How many users do you think you're going to have within the next, let's say, 12 months of your contract? And what are you currently paying? And let's see if we can save you some money. So then we get to work on ordering the metal and configuring a custom stack or multiple servers for that client. And again, it's more of a white glove program so that we know when we deploy and migrate that client onto our servers, or our metal as we call it, that not only are they going to be happy today, but they're going to be happy throughout the entirety of their contract, which you can see because our first client is now re-upping their contract from 1 year to 2 years, from 70, they then raised it to 84K a year. Now they're going for just under 200 grand a year. They're projecting some huge growth. But even in the term of their first contract, they're about 7-8 months in. They were at 100,000 users they started with us. They were only running about 22% of the available resources. Since they've grown to 200,000 users, and their server is running about 40% of available resources. They're paying 300 grand a year. They dropped to 70 to 80K with us. Now they're operating on a quarter of the cash, doubled their user base, and can still grow 150%. That's what we're offering to market, is a floor price that people haven't seen yet, because no one's doing this stuff right. Like,
Well, as long if your price is right, I mean that's wonderful. I'm still trying to envision with the number of businesses that would be under these entities. What do you think your number one challenge is going to be in tackling scaling for all these businesses that fall under these entities?
Yeah, you're gonna have to rephrase that because what are you really asking? Like, because I'm trying to say I don't want a million
Just your
clients.
scaling solution. What is your
Oh,
scaling
it's simple.
solution?
Yeah, I mean it's very simple. So we have our supply chain in place to meet our scaling demand. So that's one thing that's checked. And we have a very robust team that's diversified in a few different lanes of business development and strategic development. So it depends on which sector we're scaling. Are you talking about scaling supply? Are you talking about scaling demand?
Sorry about that. Scaling your demand for
Oh
the end.
yeah,
Sorry, go ahead.
yeah. No, you're fine. Look, we've had zero outbound reach right now, like in terms of looking for clients. It's all been inbound, and in the last 30 days, we've had, I think it's now 12 clients come to us. And in the same time, we've been creating venture partners with really, strong rock star talent guys and women that are, 50 years old plus and a huge successful track record of either going to trade shows or just a nice Rolodex that they have that they could bring to the table with, warm and deep relationships. So realistically, it's kind of just making sure the right people are in the right places, doing the right things the right way. And the end result of that is always more time. So you get to these goals a lot faster if you simply structure the business properly. So whereas younger tech guys might be behind the curtain on the fact that this is a tech company, we're leaning on, guys with white hair that have much more experience on business development that come to us and say, "Hey, I'm not in this for peanuts. I need to be making 7 figures a year, helping you on BD. How do we make that happen?" These are the venture partnerships we're putting in place.
And scaling your supplies.
That's done. We have that. So there's a few things. Like one, we have amazing advisors, as Cowboy had mentioned, and even some strategic partners that have satisfied additional supply chain resources and allocations they already have under contract. We've got fund managers that are invested in portfolios of AI companies that have allocations under contract with tons of room. We've got advisors from some big chip companies as well that can get us direct, amazingly discounted rates. And even beyond that, I would point back to our IP. While everyone else gets stuck in the chasing the AI compatible plug and play GPUs, we can be focusing on the areas of the supply chain where there's not as much competition, such as gaming and 3D rendering GPUs. We can buy those all day long, very little friction, and we can convert those to become AI compatible. Another thing we're not seeing in the market yet.
Thank you. I'll toss it over to Lady Trader.
Of course.
Hey, thank you so much. So a few other questions about the launch. I want to understand a little bit more about what your launch plans are. When are you launching? And then two, are you going to be giving out contract address early? Is it going to be just a DEX launch directly? Or are you also considering maybe more of a real fair launch, right? Like a bonding curve or something like that, where everybody has an equal opportunity to buy versus, bots getting in or anything like that?
Yeah, so yeehaw, Cowboy, why don't you take this over?
Yeah, no, so I mean, really our philosophy from launch was pretty simple. Like we wanted to make sure it was as fair as possible so people could get in. In terms of the bots, I mean, we're employing a very robust anti-bot, anti-snipe strategy in order to ensure that, there's no issues, because we've all been down this road before, and we have, again, really, really strong panel behind us with deep knowledge and expertise in deploying smart contracts. So making sure that's not going to be an issue. And as far as, when, I mean, I'll say very, very soon. Everybody should probably keep on their keyboards fairly soon because, you know, as you've seen, ETH has absolutely skyrocketed in the last couple hours, and it's really a wonderful time in the market. So just keep an eye out.
Yeah. Yep. And I think things are looking really good. I think now that we've made it through the halving, you know, and had that bit of a correction on the downside, things seem to have plateaued. We're starting to see some healthy upticks right now. Timing's looking really good. We've also focused heavily on community growth. So, you know, I think I don't know the exact numbers, probably around 2,500 in our Telegram and 6,500 or something like that on Twitter in the last month. And we didn't want to go with crazy big numbers. We wanted it to grow organically. But being in the, you know, kind of from the early side of this space, 2012, 2013, we've seen so many different types of launches over the years. And we know the one thing that screws things up is when you pick a launch date and you're stuck to that now. And anything that goes wrong, and things always go wrong or take longer than expected, or market has something that happens, you know, now you have to deal with either launching in a bad position or disappointing your community with mismanaged expectations. So I mirror what Cowboy just said. It's really, really important for everybody to stay tuned at this particular stage because, you know, we're very, very close to launching this. And I think it's going to hit everybody very quickly when they realize it's happened.
Awesome. Hey, Sensei, what's going on?
Man, the questions asked on this panel are incredible. I just want a big shout out to everybody up here. I've learned so much just being here the last hour. So thank you for all the panelists that asked amazing questions. I was going to comment and ask about when will the launch? When can people participate? But it sounds like you guys are keeping that close to the vest. I did want to ask before we ended here today. On your website, it talks about clients and infrastructure providers, NVIDIA, AMD. There's a few other ones, and it says plus many others. Did you just want to touch base on maybe some of the things that you haven't mentioned yet? Or if you don't want to go down that road, maybe you could talk to us about maybe what the next 6 to 12 months looks like behind the scenes and kind of why you guys decided to create this. Did you feel that there was a need? So lots of opportunities and questions you can tackle. Thank you.
Yeah, of course, and thanks for asking. I think I mirror what you're saying as well. Like everyone's asked amazing questions, and it's been a bit of a diverse bag of speakers with different types of questions and perspectives. So I'm sure that's been really helpful to a lot of people who are like, you know, what is going on in this space? But to get to your questions, I think what made us do this was simply, again, I'll keep it light, but it was that government contract that we were on where we had the light bulb go off that made us realize we could get our hands on compute resources like GPUs, and we could extract more performance than what's written on the box. And so that was where it all started. Seeing several others come out with subpar business models was extraordinarily validating, in seeing that, you know, our theory of people might like this was right. And it just so happened to have coincided where, you know, we onboarded our first client in November. You know, we did our first benchmark, our internal benchmark on compute power and hash power in October. And then we onboarded the client once we proved out that the stack worked in November. So when we put like many others, it's not as silly as it looked. We even had a question internally saying, should we even put that? Are people going to believe us? And oddly enough, you're the first person that asked this question. When we say many others, there's two reasons why we didn't put the clients' names up there. One, some of them, like the one that's on with us, they're VC funded. They have a plan to launch their own token. It has nothing to do with AI. But for that reason, we're trying to align our calendar so that, you know, their investors and people don't think that they're doing two tokens at once, or cause any confusion. Or, you know, our friendly CEO, who's also our client, we don't want to piss them off by having them get random emails or whatever that could be confusing. So we're waiting for their consent. The other clients, they're either at LOI stage or a verbal commitment or absolutely certain, such as the digital casino that we're going to do with the Indian partner, Native American partner. So again, it's like our focus was just, can we do more than the competition has done? When Node launched their token, they hit 150 million market cap in 2 weeks, and their roadmap had two things selected: website launch and token launch, right? Nothing else was done. So we wanted to have a full phase done that tested our supply chain, proved our theories of our proprietary technology, proved that a client would pay for it, proved we could save them money, all the things you would need to see if I were on the other side of the fence investing into this. And just learning from what people are doing, and reminding ourselves that there's never really been a downside to waiting. I mean, look at where we are right now. The market couldn't be healthier in the last couple of months, and now it seems better than ever. And, everything's moving in this direction. Plus, the world has seen, that the AI slash the GPU plays are here in the token world, but there's still a lot of room for some true blue chips to step in. So I hope I answered most of your questions. If there's another one, please point me back to it.
No, you did. And you know what? There's limited time, and Lady Trader probably has a banger of a question. So let's throw it over to her for that.
Cool.
Thank you. So my question is about the proof of compute model that you have listed on the website. You did mention that you are going to be basically, your goal is to extract up to 60% more performance per GPU. And I do know for a fact that it's very, very difficult to achieve, right? I mean, there are people there are scientists every day that they're trying to actually achieve 1% more, right? There are people, or there are companies like NVIDIA and others that have full-time employees trying to get as much out as possible. And we are talking about like 1% more, and that's not possible. So what are you guys doing differently that we are missing here?
No, it's possible. It's just a matter of like, what is NVIDIA relying on? Like, yes, they have their own internal R&D company, but they also have been relying on libraries like TensorFlow and PyTorch for a very long time. Our internal scientists, data scientists, cybersecurity experts, true, just as they have theirs, we have ours, right? Brilliant innovation comes from no-name shops all the time. Look at Sam Altman and ChatGPT, right? In the last year, we've seen the biggest startup ever, and no one knew who he was before that. So, when I'm not comparing myself to him or saying we're going to be the next ChatGPT, absolutely not saying that. But I am saying that I wouldn't say it's not possible, because unless you've actually owned and managed metal or gotten your hands on and done some of the things that we've done, I don't think, I think there's room for learning and also seeing what's possible. Another thing is the market hasn't been heavily focused on how good can we make AI compute, but for the last 12 months. So maybe 18 months. So there's a lot of innovation happening as we speak. Very few out there have been doing this at the institutional and government level for the better part of the last decade as we have. We've been on premise at government servers optimizing the performance. And when a government pays you and says, hey, I need this Toyota Camry to run like a Ferrari, here's a check, I don't care what it takes, get it done, you figure out a way to do it. So again, it's we've been contributing to those libraries and have DEX tools, timestamps, everything that show, dated back 2015 AI, contributions in PyTorch, in TensorFlow, some of these open source libraries. So the same people that NVIDIA rely on are not just in their company, they're also in those open source libraries. And a lot of the really good people don't work for NVIDIA, they work private, and they make a lot more money, and then they sell tech back to it. So, I would just say, if you can find anybody, any example out there of somebody running multiple, let's say 9 or 10 RTX 4090s or 5090s on a single motherboard, let's start there. Because I can send an image to you right now that shows that we've done that. Now, the reason why we're not sharing that proof of compute yet is because we want to take care of you guys. If we think about it, we go right now, there's the NVIDIA call that's happening. There is enough positive natural marketing that's going to come out organically in the coming weeks that we want to drop a proof of compute that doesn't just show here's our stack or here's our servers. We want to show a brand new benchmark that shows here's our performance. And when we can show that we can take non-AI GPUs and convert them and have them run in similar performance metrics to the AI compatible ready to go ones, I think we'll have our own part of the market and our own slice of the pie, and whether that's 1% of the overall market or more, that's a healthy business.
Yeah, and I was going to add to that a little bit as well. I think really a lot of the confusion can sometimes be how are you optimizing one individual, motherboard? Not necessarily. So we're stacking them to optimize performance, and then by stacking them, we get that optimum performance, and then surpass the capex performance of a larger AI focused rig.
That's a good point. Like, think of it this way. When we did the 9 RTX 4090s, we paid $1,800 per chip. So multiply that by 9, you're 17-ish grand roughly. So, but we got similar performance to an NVIDIA H100. Now, when we say that, it's important to note that even after we deployed that server, it was probably 30 to 40% less performance than an NVIDIA H100, right? It's not exactly there. But the cost of the stack was, less than $18,000, where an NVIDIA H100 in the secondary market would have cost you between 40 to 60 grand. So you're able to extract a lot of performance for a much lower cost, reach a faster break even for our company, and a lower price for our clients. And again, when you look at chips and you say, oh, this chip's better than that chip, that's fine. What does the client need? What are their product requirements and specifications? What is their user base, and what is their projected growth for the term of the contract? These are the questions we ask, so we can build a client a custom cloud basically for their specific needs on our network. So realistically, if that client comes to you and saves money and is happy with the service they're getting and has the security they need and all the features they need, they're likely going to keep staying with you. As we've shown with our first client, we have retention. They're signing up for double the time and even over double the money. So that's pretty much where we stand, I think.
Thank you so much.
I love it.
Yeah, my pleasure.
Oh, great questions as always. What a panel. I had a feeling that everyone was going to dig in here when I knew that we were talking about AI and tokens and everything. I mean, this is just right up everyone's alley. So first off, huge love to the Wolfpack joining us up here on the space. Great to have my crew as always with Kayla, Lady Trader, Sensei, Action, Nix, Metamona, Toki. Got Sigmund hanging out up here. And then big thank you to the team over at AIGPU for coming on and withstanding the test. We don't take it too easy up here, not gonna lie. I think you go in a lot of spaces and it's a lot of hype men, and we come in and we dig in. So I just want to see if you had any final comments for us today.
No, I love spaces like this because, look, there's a lot of room for malpractice in the crypto space, and everyone's been dragged through the mud multiple times, not excluding myself. I've seen it all. So when I looked at my team and said we're really going to do this on the token side, and it involved me being in this position, I said, look, the only reason I'm ready to do this is because I'm looking forward to the challenging questions and fielding them, because that's where you make it or break it. If you fumble, then that gives you a pretty good sign that you might want to be cautious of any investment. But Just happy to be here, happy to be on the platform. I don't know how much time you have left, but there are a couple more people here.
About a minute. Yeah, no, I actually have only about a minute left here. I do have to run to another meeting. So anything else for yourself?
Yeah, I think also, love having you guys, and be sure to follow us on Twitter, hit those notifications, as well as Telegram, because, as we said, the market is looking wonderful, and would love for you guys to get updated when we do launch. So,
Which is going to be very, very soon.
very
Again,
soon.
for everyone's security, we don't want to drop that, too ahead of time, but that's why it's important what Cowboy's saying, and we got this from an advisor. It's important that you do follow us on Twitter, but on this particular page, just for the meantime until we launch, make sure your notifications are turned on so that you can get that real time message and call when it's actually live. So that, and our Telegram, of course, we'll be dropping some info there as well. But again, just thank you guys for the time. Appreciate it.
And thank you, Wolf.
Yeah, my pleasure. Thanks so much, guys, for coming on with us tonight. Shout out to the crew for being on here throughout the whole thing. That's going to do it. Long day of Spaces. But tomorrow we'll be back with about 11 hours straight content. So looking forward to it with everyone. Hopefully y'all come and hang out with me. Take care, everybody. Let's do it again tomorrow. Have a great night.
Thanks.